Hello, everyone. Good afternoon. Welcome, welcome. Could I get a mic check real quick before we get into it? All good. Awesome. Appreciate it, Christopher. How you doing today, my man? Hassam, thanks for joining us. Vlad, 5 out of 5. Appreciate it. Olawale, thank you. David, sounds good. Awesome. Appreciate you guys. And speaking of microphone, David, we'll be going into some grains today, looking at corn and wheat. I'm sure you've been monitoring that as well, seeing some nice movement in those in the grain market. So we'll go ahead and take a look at the agricultural commodities as well. Christopher LG, life's good. Life is good. Absolutely. All right. Awesome. So welcome in, everyone. Thank you for joining us. We've got quite a few new people here. So we will be doing our usual intermarket analysis, pre-market forecast, what I'm seeing for the week across an array of different assets. I'll share my thoughts, my opinions, and as well as my analysis. Denisha, hey, all you lovely people. Hope everyone's good. Thank you for joining us. Hope you're doing good as well. David, awesome. Looking forward to the grain talk. Absolutely. I figured you would be, my man. All right, awesome. So let's go ahead and get started. Before we get into the charts, just some things to be mindful of. We do have a busy economic calendar this week, and then also that in conjunction with a lot of the world events going on right now. Being mindful of the platform I'm speaking on, I must be careful of how I say specific things, but you guys can read the news headlines, see what's going on, and then for those of you guys that know, if you know, you know. So there's quite a few things going on right now, important to be mindful of as speculators, as traders. But as I said, I need to be careful with what I say on this platform, but you guys can read between the lines. So just a lot of things to be mindful of inside this coming week. I am expecting a lot of volatility, a lot of animation because of what I've just mentioned. So just that to keep in mind within the technicals that I'm sharing as well. All right, so let's get into the dollar index. Start with dollar always, as it is the linchpin of the financial system. So what dollar's doing, everything else will eventually bend the knee to it. So this is why for our intermarket analysis, we always begin with dollar so that we can get our bearings with regard to risk on, risk off. So looking at the dollar index here on a 3-month chart, we are trading inside this fair value gap. And this is the reason for the consolidation we've been seeing, pretty much range bound. And it's because we're in this higher time frame discount array from high to low. This is a discount fair value gap. So I will be interested to see how we trade inside of this discount array on a 3-month chart. So this is the drawn liquidity on the downside and why we are consolidating within that. So drop it all the way down to a weekly chart now. Let's start refining. So we have a swing high here on the weekly chart. We had 3 consecutive down close weeks in a row, so it is reasonable to expect some type of retracement or some sort of up close candle. It is interesting to note where we did reverse from. So zooming in here on this price action, let's look at the 50% of the wick of the order block. So extending that through here. Whenever we have a order block with a long wick, we use the wick, more specifically the high, the open, and the 50%. And we saw a nice bounce off the 50% level of that order block, and that is what sent us into the retracement higher. And then also you guys see this blue daily fair value gap. We'll look at that on a daily chart, but that's also where we bounced from on dollar. So going into this coming week, we do have a fair value gap above market price. I'll be interested to see how we trade there if we do. Do we trade there and reject lower, or do we get above it and use it as support, trading higher into the premium arrays we have here? I'm still favoring bearish order flow, that be because on a monthly chart, we are still seeing bearish order flow in a sell program. We're seeing volume imbalance here, keeping price at bay. So I will want to see if we do want to dig deeper into this monthly fair value gap. So the monthly chart gives me a cleaner view on the weekly chart that then gives me that clarity top down from the weekly, daily, all the way down into the intraday time frames. So this is what I'm favoring on a monthly, given everything I've shared. So back to the weekly chart here. Let me take off this 50% level. I like these relative equal lows here as a draw, given that we traded up into this bearish order block in here, rejected the 50% mean threshold, and now we are rotating lower. So I do like these relative equal lows as a draw on liquidity. However, that will be determined by how we trade inside of these premium and discount arrays in here. So as I said, I'll be monitoring how we trade inside this weekly fair value gap for further bias coming into the week. So no news on Monday. And given all the news that we had over the weekend, it'll be interesting to see how we gap open and how we move from that. So I personally will be using Sunday and more than likely Monday as well, just for intel to gain more insight on where the market's likely to go and see if it's willing to show its hand. Because of all the things going on, as I said, we will be likely seeing a lot of animation in price delivery as a result. So on a weekly chart, I shared my draw. I'm expecting the relative equal lows as long as we remain below this weekly fair value gap. If we get above it, then we likely trade higher into the rejection block and the buy side liquidity here. So dropping down into a daily chart now. Zoom in here, still see those relative equal lows. So now this is that weekly fair value gap that we formed this week on the close of this week. So that's, as I said, what I'll be monitoring. Traded higher into the buy side here and into the 50% consequent encroachment of this wick beautifully. But note where we made the low of the week. So for those of you guys that remember, I did the stream on Monday because it was a bank holiday. So I shared I was expecting lower prices, and then it gave us that. I said I would want to see us trade lower from this fair value gap specifically. Traded higher Tuesday, and then we expanded lower into previous week's low and into the daily fair value gap. So two of the targets hit. We did not get that acceleration lower like I would like to have seen, but there were several indications in here, and we'll zoom into that on an hourly chart that indicated why price was not going to continue lower. So the reason I give several targets to you guys is because I don't think, or it's not because they all three have to be hit, but it's because we need to monitor order flow and how price trades around these specific premium or discount arrays. And as I said, I'll go into why I anticipated the reversal after we took out previous week's low and traded into the daily fair value gap. So on a daily chart, as I said, as long as we remain below this weekly fair value gap in here, I will expect lower prices. However, if we trade through it and above it and then start using it as support, then it does likely send us into the buy side here and the buy side above this high here at the 104. So that's what I'm seeing here on dollar index. So we did deliver to that discount fair value gap, beautiful delivery as we expected, and then we saw a midweek reversal higher. So let me make sure that's everything I wanted to cover. Yeah, perfect. Awesome. Yep. So as I said, I'm going to be using these PD arrays for more intel and gain more information Sunday into Monday so that I can have that risk on, risk off clarity. So dropping down all the way into an hourly chart now. Let's get some annotations. So this is the sell side. This is previous week's low. This was the first objective. And then the second one I gave is this blue shaded region, which is that daily fair value gap. So we traded higher. Everything was looking good. We traded to a short-term premium, which I highlighted we would if we're going to trade lower. And that's also that daily fair value gap. Then we saw a nice reaction lower, trading into the sell side and into the daily fair value gap. So those of you guys that have been with me for quite a while, I usually tell you guys when I want to see more information or I don't have a clear bias, I'll say I want to see how we trade at these specific levels. So for those of you guys that may be new, you may not know what that means, so I'll go into that here. So when I say I want to see how we trade below a low or how we trade into a daily fair value gap, this is what I'm referring to. So yes, we did trade to two of the objectives I had for last week, but how did we trade here? Was this market indicating that it wants to continue aggressively displacing lower, or did it indicate a reversal? So yes, we have a 3 drives pattern, but we're not here trading patterns for pattern's sake. We see a 3 drives below previous week's low into the daily fair value gap, which it was unwilling to even reach 50%. So the fact that we saw the 3 drives below the sell side, we start seeing lack of displacement on the downside. So this to me indicates that all the sell side is being ran out for a midweek reversal. And then what confirmed that was the shift in market structure that we saw here. And then we traded down into the fair value gap, institutional order flow entry drill, expansion higher. So now looking at this price action further, We then see this fair value gap in here. It's small, but the bodies are still respecting that beautifully. And then we trade higher into the buy side into the bearish order block in here. So this is why I wasn't caught off guard by the reversal, because I'm reading price action and order flow at specific levels. So I wasn't too active in the Telegram because, as most of you guys know, I was traveling and I was getting back. And then Tuesday, Thursday, and Friday, I was just focused on my trading, because before anything else, as you guys know, I'm a trader. So we did see that midweek reversal, and that, of course, put pressure on index markets and euro. So no surprise for the midweek reversal once you understand how to read the order flow and the signatures that the market provides. So going into this week on an hourly chart, I'll be interested to see, as I said, this purple region, monitor order flow in here, how we trade there. If we are to go higher, we should get above it, use it as support on an hourly. If we use it as resistance and then take out this swing low here aggressively, then I do like continued lower delivery. But going back up to a daily chart, bearish order flow hasn't been upset on a daily, weekly chart yet, because we're still respecting premium arrays. However, if we get above it, then that would indicate to me that there's likely a change in state of delivery, and we are going to likely see higher prices. So that's what I'm seeing on dollar index. So now let's go over to the bond market. And bonds are not providing much clarity in terms of risk on, risk off either. Let's go up to a weekly chart. So we're pretty much consolidating here within this fair value gap. Not really in a hurry to go below or above it. Let me take off this order block because that's on a daily chart. So just consolidating in here, not in a hurry to really go anywhere. We're between this fair value gap and this one. And we're pretty much in a consolidation market profile within this larger parent dealing range. So we are in a consolidation for bonds. So it's not giving us much clarity with regard to dollar index. So now this is where I take my attention over to the bond yields, and I'll use them to see if I can gain insight from them. And then we'll go into that once we go filter through the T-bond market. So take this off here. That's immediate rebalance. Trades right up to this previous candle's low. And then we see the animated delivery on the downside as a result. So now refining from that weekly fair value gap down to this daily fair value gap, look at how the bodies are respecting this on the downside and on the upside. So as long as we remain above this low and below this high, we're in a consolidation profile for the bond market. Once we break out to one side or the other, then we can start seeing more animation on other assets, which I'm sure we'll see this week. However, I will want to see how we trade. Not that I'm a breakout trader or waiting for a breakout. I just want to see how we reprice out of this consolidation. Because as we know, the phases of price delivery, expansion or consolidation is always followed by an expansion. So I'll be interested to see which way we expand out of, and then that'll give us that insight for risk on, risk off. So as I said, nothing much here in terms of clarity, just range bound for the most part. So now looking at the interest rates, which I use when the T-bonds aren't that clear. And these aren't, the yields aren't being much helpful either. We traded higher into the rejection block here and then displaced lower. And now we're using this fair value gap, now balanced price range as resistance. Look at the bodies, candles respecting it beautifully. So on the yields, I am, gun to my head, seeing lower prices. This is very sloppy, not clean price action, so it's 50-50. But just from what I'm seeing based off the order flow, how we're respecting these premium arrays, I do favor continued lower delivery on the yields, which will also translate to a lower dollar as well. But for the most part, I will just be waiting for more information. And then the 10-year yield, same thing, not giving us much clarity either. But the fact that we're unable to trade through this fair value gap on the daily chart is indicating weakness to me. So I would be interested to see yields rotate lower. So let's go and take a look at Euro, take a look at our Forex markets real quick. And then, David, I remember your question regarding how I got my entry on the Euro swing trade that I took, and I will definitely be sure to cover that for sure. So let's go ahead and look at Euro on a weekly chart. So similar as to the dollar index, I'm not going to go too deep into this. We traded down into that weekly bullish order block, saw a nice reaction higher. One thing that is noteworthy is how the bodies are respecting this fair value gap in here. We're seeing the bodies unable to get a closure above it. So, and then we did see that retracement into the range we've created from low to high. So now we have a fair value gap below market price, similar to how we do in dollar index. As I said, it's the same thing, just the inverse. So how we trade in here will indicate if we want to go higher or if we get below it and then we continue lower. However, I am favoring higher because we have this volume imbalance in here. We have this buy side and order flow is bullish. So I will favor these highs. However, I will wait for more information in the bond market and dollar index. So dropping down into our daily chart. I'm going to take these levels off to clean it up, but just remember what I said regarding this weekly fair value gap here and here and how we're going to use these to read order flow and gauge how the algorithm reacts off these key arrays. So we are seeing bullish order flow, called it higher from this fair value gap in here, trade into it, and then nice expansion higher into premium. And then we did deliver into this bearish order block here, this last up close candle. And then this is where I was taking partials aggressively on my swing trade as we are in a premium. It would have been nice to have gotten long from down here and held it. However, with me being on vacation, I wasn't really too attentive to the charts, especially to monitor a swing trading position. But I did get in here and caught the expansion into previous week's high and into some premium arrays on a 4-hour chart that I'll share with you guys. So looking at the fair value gap here on the daily, as long as we remain above this, I do expect continued bullishness. If we get above it, close below it, and then start using it as resistance, we'd like to continue lower. And that would be either met with a consolidating dollar or a higher dollar index. However, since I am so favoring bearish dollar, I'm also favoring bullish euro into these relative equal highs here. All right, so now let's go ahead and go into the swing trade I took, and I'll go ahead and cover the entry. So I'll show the entry second. Let's look at this thing on a 4-hour chart. So I was favoring a market maker buy model here, this being the original consolidation. So that's why I got a long entry in here. And then I was looking to catch the lines portion of the weekly range. So this is a one shot, one kill trading model that I have. So I predominantly swing trade the Forex markets. I don't intraday trade it as much as that's what I do in the S&P. So I predominantly swing trade the Forex markets. So I was looking to catch the one shot, one kill. I was expecting a Tuesday low of the week profile and then an expansion higher into the premium arrays. But same thing on dollar, how it indicated it wasn't going to continue lower. Euro did the same thing. So this is why I scaled off most of my position here above the buy side here and above previous week's high because it was likely to reverse, and then it took me out at my stop loss, but still had a considerable profit on the trade, even though I was incorrect in my bias. So I was looking for the market maker buy model. And then one of the confluences that I had, so for those of you guys that have been with this past couple weeks, I've been saying the euro would be better for shorts and the pound would be better for long. So let's go ahead and cover those. And then I'll share with you guys another confluence that I use to determine that. So as we see here, pound's been the relative upside leader. No surprise to us. I've been saying that since we were trading down here in May. And then we see euro's been better for shorts, while pound has been better for longs. One of the confirmations for that, for the Forex traders, I look at the Euro GBP. So because Euro GBP is bearish and Euro is first, it's going to be the weaker pair or the outperformer on the downside, whereas the GBP will be the outperformer on the upside because of this relationship in the cross pairs. So that's something I use to gauge the strength and weakness of Forex pairs that I am looking to trade. So now looking at the entry real quick. Here. So this was the entry, David. I took this on a 1-minute chart. So I got a 1-minute entry right here at 10, right around 10 o'clock. So now we'll go into the charts and I will share how I got this entry and what it was I was looking at. Oops. Okay. So I highlighted why I was favoring higher prices and where I was looking for price to draw to. So because I had favored this Tuesday low of the week profile, I was looking to get a long. But keeping in mind we had the Fed chair speaking in the morning session, I wanted to see confirmation that we were going higher. So for those of you guys that have been with me and trained with me, you guys know what this is a balanced price range. So I was comfortable going long in here and placing a stop down here because if we were to go higher, this efficiently delivered price range should not be violated. So now dropping all the way down into a 1 minute chart here. I used the silver bullet entry model to get in on a swing trade. So as I said, I got in around 10 o'clock. So this was my entry right here. So because I'm favoring higher prices, but I'm doing a swing trade based off an hourly and daily chart, but I can drop all the way down into a 1 minute to refine my entry. So I got in on this 1 minute fair value gap within the silver bullet window. The reason the silver bullet's effective is because this is the expansion phase of the daily range. So I'm comfortable getting long in here because we're still in a discount and we were still close to the daily fair value gap. So if I wanted to get long to trade up into here, I want to get long within this or close to this discount array, which is called the close proximity entry. So I was comfortable going long in that 1 minute fair value gap to ride the expansion higher. And then now taking off the market replay. So I got long in here, partials here, here, and then when we took out these relative equal highs here, I took one more partial. So same thing as we saw in dollar index. We traded above the highs, but how did we trade there? Did we continue displacing higher, showing a willingness to want to continue rallying? Or did we show a willingness to want to drop lower? And then we saw 3 drives pattern, displacement, shifting market structure, fair value gap 2022 model, right down into the sell side and that daily discount level. So that's what I'm seeing for Euro. Just covered that. Had quite a few questions on the management and the execution on that swing trade. So went ahead and covered that. So looking at Euro on a hourly chart. As I said, same thing as dollar index. We traded down into this bullish order block. So I'd be interested to see, do we find support here and continue higher? That's what I'm favoring. However, if we trade through that order block, we likely go into the sell side here and trade deeper into that weekly fair value gap that I highlighted earlier. So let's go ahead and take a look at the S&P market now. Let's go to so on a weekly chart. But before that, let's go into the continuous contract and look at some higher time frame. So this is the 3-month chart for the S&P continuous contract. So we traded down into a discount relative to the dealing range, more specifically to this fair value gap. Here, body's respecting that beautifully. Wicks can color outside the lines, and then we've seen a nice expansion higher. So by using these higher time frames like a monthly, 3-month, it allows me to trust that weekly bias and daily bias I have, which then, as I told you guys, translates into profitability and clarity on the lower time frames. So because the 3-month chart is showing bullishness, it allows me to trust the buy models on a weekly chart. And then also looking at NASDAQ, we're also seeing the same thing. We traded down into this fair value gap in a discount. Body's respecting that level, and then we've been expanding higher. So now dropping down into the weekly chart for the S&P. Okay. Okay, so we have seen consecutive bullish weeks, 1, 2, 3, 4, 5 up close weeks. So it is reasonable to have a retracement. So we had an inside week after a nice expansion higher. We did reprice to the high end of this weekly fair value gap. So we are still having our premium arrays be delivered. We expanded through this key buy side liquidity as well. So given that we've traded to several key premium arrays, a retracement is to be expected. However, moving forward on a weekly, as long as we find support inside of this fair value gap here, this weekly fair value gap, I would expect this volume imbalance to be the draw on liquidity. And considering that NASDAQ already reached it, If we do see further downward pressure on dollar, it would then be much easier for the indexes to rally. So nothing much more on a weekly chart. Let me go ahead and make sure. All right, so down into a daily now. So several things confirmed to me the retracement we were likely to see. As I covered on a weekly, we hit several targets, but also considering that then we saw a swing high form. Given that I did the live stream on Monday, the swing high still hadn't manifested, and we were trading down into this fair value gap. So it was likely that we could have just traded into the fair value gap and then rallied higher. But because we created the swing low or swing high and closed below this fair value gap, I was then confident that we were going to likely seek a deeper discount. And then we repriced beautifully to the low end of the weekly fair value gap, which is that blue shaded region, and a beautiful delivery into the daily fair value gap on Friday, which I did share in the Telegram chat was the likely draw on liquidity. So looking at the daily chart now for what I'll be expecting, we have a balanced price range in here. So balanced price range and a fair value gap. So because the underlying order flow is still bullish, I'm not looking to call a top or bottom in the market until we get that confirmation. So we saw retracement. So how we trade into this daily fair value gap will indicate to me whether we're going to continue higher or if we have seen some type of high put in on the S&P market. So how we trade here is indicative. Do we use it as support and rally higher, or do we get below it, use it as resistance, and continue resuming lower? I'm favoring higher prices based off the drawn liquidity on a weekly chart. However, we do need to keep in mind what we're seeing here on these lower time frames and the fact that we saw the swing high on a daily chart and then a closure below this fair value gap indicated to me that we're going to see a deeper retracement, and that delivered beautifully. So that's what I'll be seeing on S&P moving forward. If we use this as support and trade higher, first objective I like is this balanced price range. Through the balanced price range, I like the rejection block here. And then through that rejection block, I like the buy side liquidity and that volume imbalance here. And then also split that in half, get a consequent encroachment, call that 45, 38 and a half. And then that would also be an upside draw. However, if we get below it, use it as resistance, then I like these discount levels here, sell side, and this inefficiency in discount to be repriced too. So that's what I'll be watching for. And because I don't have that clarity that I usually come on here with, you know, hey guys, S&P is going here, here, and here, and it happens week in and week out. Because I don't have that, I'm going to wait for more information. And that's what I will be looking for, is what I've shared. So now dropping down into our hourly charts. All right, so refining this further, we have sell side here building up on a hourly. Sell side liquidity. So we have relative equal lows here, here, and now here. So I'll be interested to see how we trade at these lows. Do we trade down to them, reject it, and then resume higher? Or do we displace through it with energy and indicate that we're going lower? That's what I'll be monitoring on Sunday going into Monday, how we trade at these discount arrays, and then that'll give me the reading on order flow that I need to then have a confirmed bias, and then also hopefully have that clarity on dollar index to confirm the intermarket relationships. So for a draw, initially I'm expecting this fair value gap in the sell side. How we trade there indicates whether we go higher for the buy side into the premium arrays or whether we seek a deeper discount. So that's all I'm seeing here for the usual intermarket analysis. Let me go ahead and refer to my notes real quick. And then I'll go ahead and check out the chat. And then, of course, I'll cover grains and Bitcoin, as Sal was asking. Awesome. All right, so let me go ahead and go into the chat now. Bucks, just me who has bad video quality. Sound is perfect, but quality is a bit off. Never mind, quality is perfect. Okay, awesome. Glad you got that resolved. So Torcida, what do you think about Euro and GBP? So I'm pretty sure I covered that. If there's something more specifically you need me to cover, I'd be more than happy to. Dave's, hi good people, can you take a look at gold? Absolutely, yeah. Let me go ahead and take a look at gold real quick. Well, before gold, let me go ahead and look at the grain markets real quick, and then I'll go into the questions. I said I'd cover that, so let me go ahead and do that now. Okay. So we want the continuous contract. All right. Awesome. Okay. So looking at wheat on a weekly chart, beautiful delivery. I remember we were talking about this during training, David, how we were looking at the sell side here, and yep, these two here, I still have those levels from that time. And then we saw a beautiful delivery down to these discount levels. And then we're now seeing a displacement higher on a weekly chart after taking sell side in the deep discount. And then also considering the events we have going on, that also affects grain prices, exports, and whatnot. And then also considering the dollar index, the inflation, how that is also, inflation isn't going to be reflected on the dollar index because that is just relative strength, not absolute strength. That's another conversation. But because we are seeing inflation as the money printing is continuously going, that will make everything priced in dollars more expensive. So a little bit of fundamentals behind what we're seeing in the commodity markets. Commodity markets are driven much more fundamentally than other markets. So also considering that there's a drought, also some more fundamentals. So I remember we were talking, and I'm sure I talked about it on the live stream too, how overall I am extremely bullish on grains, but that doesn't mean I just go in here and buy the market. I need to wait for the algorithm to show me confirmation that we are going to indeed start seeing higher prices. And as I said, the algorithm will always tip its hand to what it's going to do. And this displacement higher here is the tipping of the hand. So seeing that we've had a displacement, and also one thing that I remember we covered, look at how we're trading through the lows. Lack of displacement here, here, and here, versus how we're trading through the highs now. Aggressive, energetic movements through the swing highs. So now looking at a daily chart now. Beautiful expansion higher, low, low, low. As soon as this order block manifested here, that was the green light for going long in the wheat market. So extending this order block through. And then this is an order block. Why? Because it took sell side, trading through that opening price, change in state of delivery. So look at how we trade back into that and respect that level beautifully. So now that we're seeing the respect for that level, what is this down close candle? This then becomes a propulsion block because it's order block nested within another order block. So in the propulsion block, the sensitive level is going to be the wick to the mean threshold. And then look at the handsome delivery we're seeing right there. Not willing to violate that opening price with a body. So long opportunities here, here, and here, and then nice expansion higher. So now that we've moved up a considerable amount, I want to see how we trade now. Do we want to retrace? I wouldn't expect us to retrace all the way down here if we're going to be bullish. However, I want to see, do we trade into here and show signs of going higher? And then these discount arrays here would definitely be some nice entries for a long-term profit on the grain markets for agricultural. So shout out to Farong. I know you're taking advantage of the agricultural bull market we're seeing. So we've been long agriculture and commodities for a while. So shout out to my lady Farong. All right, so going into corn now. ZC. Let's go and look at a weekly chart. So rejection lower on a weekly. So took out that sell side, nice expansion higher. So we traded up to this rejection block here, the highest up close, and then we've traded significantly off that high. So nothing clear here on a weekly other than we have these relative equal highs here. We also have this trend line liquidity building in here. And I don't trade this as a short. I look for the market to bust through this and take advantage of the liquidity of the misinformed people that look to trade with these types of strategies. So dropping down into a daily chart now. Let's look at the adjusted contract. Beautiful. All right, so looking at corn, I remember we were discussing this in here, David, and I remember I highlighted this breaker, and then we found support within that breaker beautifully, and then we rallied higher. What would be the targets? This jumps out to us off the charts, these relative equal highs, and then highs here. So going long in here, beautiful take profit. So now what I'll be interested to see in corn moving forward. So nice move higher, and then we're now retracing. So how we trade inside this fair value gap and this bullish order block. So we have these two consecutive down close candles, which would make our order block on this time frame. Sending that through. This is where I'd like to see support. If we violate this, then that's problematic for higher prices on corn, and then we may have to just wait for another opportunity to present itself for higher prices. However, I would favor support within these levels, and it may not even need to trade down to the order block. It could find support in here and continue rallying. This is enough of a discount to potentially start probing long opportunities. And we also have a breaker, the highest up close candle, that we traded into here. So breaker, fair value gap. This is a breaker because low, lower, low, highest up close. So this is an interesting level or price range that I'll be monitoring, but not just a random ambiguous range. There's specific price levels within these arrays for higher prices that I would want to look for. And then if it doesn't respect it, that's indication in and of itself. So hopefully we got some clarity there on the grain markets, David. Hope that was helpful, my man. And then I remember, Sal, I do need to cover Bitcoin, so I would definitely remember to do that. And then Davies, could I take a look at gold? Yep, that's what I was going to do. Let's take a look at the gold market. Let's look at ZAU USD. Okay. So on a weekly chart, we traded higher. We swept these highs and immediately rejected back into the range. So it's likely to expect to draw into this fair value gap, this weekly fair value gap more specifically. And then we've seen that. That's the one thing about gold is for trading it intraday, a lot of periods of just sideways consolidation, which just makes it not the best market for me to trade in my opinion. However, everyone has their preferred market. So the analysis for gold on a weekly, I am looking for this fair value gap, consequent encroachment as a draw on the downside here. So it's called the 1900 big figure number. And then how we trade there will be indicative. I remember I was discussing gold with a colleague and we now have relative equal highs here. So how we trade inside this fair value gap will make or break what gold does. Do we trade down and through it? That would indicate lower prices. And then we could see 1800s all the way down into the 1700s. If we find support within this fair value gap in here, more specifically the consequent encroachment, and then we also have a BPR, balanced price range, extending this through. And then that actually made our low of the week. So completely random, trading right down to that balanced price range where the fair value gaps overlap. So I will be interested to see how we trade here, more specifically the consequent encroachment of this fair value gap, and that'll indicate what gold's going to do. If we go higher, we will go higher from here. If we trade through it, then we can't force a bias on the market. We trade what we're given, and then that will be likely lower prices depending on how we trade lower. So dropping down into a daily chart. So this is what I was talking about, these extended periods of just sideways consolidation. So we have made a 3 drives, traded lower, shifted market structure, and now order flows bearish. So these are the weekly levels that we're looking at in here. We take these off, clean it up. And then, yeah, so we also traded down to this down close candle in here, and then this is where we stopped for the week. Bodies are still respecting that. So as I said, these are the key levels on a weekly and daily I'll be monitoring. If we get through this down close candle here, then I like this inefficiency here and here. in the 1800, call it 1885s, and then we could even see 1850s if we see animation through that. And then the last downside objective on the downside for gold will be this order block in here at the 1800s. What would invalidate that bearish bias is if we trade above this fair value gap. Getting above this fair value gap and this up close candle would indicate a change in state of delivery for me, as we're now trading through the premium arrays. So I will want to see how we trade at these key levels. However, order flow is still bearish, so I'm going to stay in line with what the algorithm is doing, which is a sell program. However, with this week, with the current state of events around the world, anything's possible. And these markets are not exempt. So just keeping that in mind, this is what I'm favoring. But with the current state of events, things can change very quickly. So hopefully that helps you out on gold, my man. Davies, Business Online. Hi, Adora. Pleasure to see you. How can we anticipate the low of the week? Sometimes it's Monday, sometimes it's Tuesday, and sometimes Wednesday. Do you have any tips on how we can anticipate? Awesome. Yep, that's a great question. So it's a blending of time elements and price. So more specifically, the economic calendar. The economic calendar indicates to us when the manipulations will come into the market, when we can expect raids on stops, when we can expect larger expansions, but also blending that with PD arrays. So looking at, let's look at Euro. It's been delivering pretty cleanly. So we'll take a look at some examples. And a lot of it just comes with experience, learning how the economic calendar drives price action, how it manifests lows, highs of the week, stop runs, and over time you get familiar with that. But for example, here, we saw that low of the week on Monday. Because we traded down into this fair value gap on a Monday, and then we traded higher through this up close candle in here, I'm not expecting Tuesday to go any lower, because Monday already did the work of trading below Friday's low, running the sell stops, and trading to a short-term discount in that array, sending us higher. For example, here on Tuesday, I was expecting this to be the low of the week. Why? Because we traded down into this fair value gap, trading below Friday's low, Monday's low. So this would be a 3 drives on a lower time frame. And then we expanded higher. But then this was negated by how I read the price action and the order flow. And then, as I said, whenever the market's going to do something, once you know how to read it, it will always indicate what it's going to do beforehand. So looking at some examples in here, I remember calling this market lower. So here we see Tuesday high of the week, Monday relation. And then what you want to do is start back testing when the highs and lows of the week are manifesting in concert with the economic calendar, and then also looking at the lower time frames. Because the way I'm internalizing this price action here, looking from Monday to Friday in here. So this is a classic week. So opening on Sunday, manipulation higher above that opening price, which is where we as smart money are looking to get short inside this fair value gap. And I remember I told you guys this is where we would drop from. And then Tuesday makes that high of the week. So then I'm going into each other day of the week past Tuesday looking for sell models. And then obviously on Friday, we expect our retracement back into the range. And then beautiful, thank God it's Friday setup going into Friday. So hopefully that helps clear up some of that. Gape, what does a continuous contract mean? So for futures contracts, there's delivery contracts every 3 months, and we rotate as the contracts reach the expiration. The continuous contract shows all the previous contracts, so you don't have that missing data. As you'll look, if you look at the ESU or ESM, you'll see missing data from previous months because that contract wasn't traded. However, with the continuous contract, it has all that data there. But it's also advantageous to use the current contract because you see inefficiencies that you wouldn't typically see on the continuous contract. Denisha, is Dylan's mic chipping out, or is it just me? Could you guys give me another mic check? It sounds like I'm maybe having some technical issues here on my end. Everything looks good here on my end. Oh, just refreshed. Okay, awesome. Torcida, best Forex pairs to trade. So all of them are great. I personally don't like yen pairs because they're highly manipulated. They can do multiple run-on stops. That's just a preference. I know people that do very well with yen pairs. But that would be a better question directed to my associate Tommy, who is a much more specializes much more in the forex market, and may be able to give you a much more refined answer. To me, they're all good. I personally like Euro GBP and dollar index. That's my triad for the forex market, and that's more than enough for me. However, you may find you like something different. Semper, nice content as always, brother. Question: can we use euro dollar to monitor futures market? If yes, why are they linked? Yeah, that's a good question, Semper. So I do use them. Whenever I'm trading and I'm in front of my trade station, I'm constantly referring to dollar index, but not only dollar, also euro and pound, because that risk on, risk off relationship, the euro or the forex market and indexes are not one to one, but one will typically lead the other. So I use this in an example. I would encourage you to check out the Trading Model Mastery series, where I actually did cover it in a live example of a trade that I executed on. So because I saw the euro dropping quickly, it then indicated to me that I would trust a drop in the S&P market, because as I said, one of the markets always going to lead the other. So I'm using that as intel for that risk on, risk off relationship. So yes, they are definitely beneficial to use. However, keep in mind it's not a one-to-one. Euro can be rallying and indexes can be dropping. That's just how I use it in my analysis. Lo-Fi, thanks for joining, my man. All right, Gape on NASDAQ 4-hour time frame. Would you say it's smart money reversal since we have rebalanced the monthly FVG? Let me go ahead and take a look at NASDAQ. So on a monthly. So looking at NASDAQ on a monthly. So yes, we have delivered higher into this monthly fair value gap. And then yes, we have, let me see, there is still a portion of it open, I believe. So yes, small portion of it open. So we did retrade to it. So we repriced it. We've offered buy side, sell side, and then left it. So that's something that'll be definitely interesting to monitor. And I'll use that to confirm it with the dollar index. Looking at this on a daily chart now, this could just be a natural retracement as well. I personally, as you guys know, I avoid calling tops and bottoms in the marketplace. But just looking at this right here, we have these relative equal highs that were taken out, and we reached that monthly fair value gap. So because we reached several premium objectives, a retracement is not something to be surprised about, because markets go up, reach a premium objective, retrace to a discount, reaccumulate more longs, and continue higher. I'm not suggesting that's what's going to happen here. That is what I am favoring. However, I do want to see how we trade inside these discount levels. So for those of you guys that trade NASDAQ, you can apply the S&P analysis I use to it. So because I'm looking at how we trade inside these discount levels for S&P, I would be doing the same thing for NASDAQ. So how we trade in here will be indicative. Do we trade to it and through it? That would be bearish. Or do we find support here and continue rallying higher and reprice the rest of that monthly fair value gap and continue higher? Some things to note is that we are potentially seeing a SMT here between the indexes. So looking at the Dow, YM1, new pane. Okay, awesome. So looking at a weekly chart, so we are seeing a divergence between the indexes right now, and I'll be interested to see if we erase this divergence or will it be used as some intel. So because this high here, we took this high out on NASDAQ and S&P, whereas we see the Dow is not doing that. So because of that, I'll be interested to monitor, are we seeing an SMT and potentially a quarterly shift? And now I'm going to ring in stocks. Let's look at Apple and Microsoft, some of the highest volume traded stocks. So we're printing all-time highs in Apple as well as Microsoft. So this could just be the turtle soup of a lifetime. I'm gonna keep it real with you guys. We could just be taking out these highs and then getting ready to trade lower. However, I'm not gonna call it top or bottom in the marketplace. Order flow is still bullish, so I'm gonna trade it as such. But I indicated to you guys the confirmations on the NASDAQ and S&P that I'll be looking for to read the order flow. So as I said, if we trade below these discount levels, then it is likely that we potentially have manifested some type of high or top in the marketplace. to then trade lower. But that'll depend on how we trade here and also what the dollar index indicates to us. So Gabe, hopefully that covers your question. Davies, thank you. Thanks, brother. Happy to help, my man. Semper, all clear, my man. Thank you. Awesome. Glad it was. Business Online, awesome. I'll back test this more. Appreciate that. Master Changing Schools, excellent channel and analysis. Keep up. May, amazing work as always, Dylan. Thank you for everyone, and Adora. Awesome. Very much appreciate the donation. Greatly appreciated here for our team. Thank you very much, and shout out to May. Master Changing Schools. Approach. Awesome. All right, so let me go ahead and take a look at Bitcoin real quick. Sal wanted me to look at that, and then I'll probably finish up here on Bitcoin. All right, shout out to Lotus Kano, the donation, very much appreciated. Thank you guys. Thank you guys. Shout out to Lotus, true day one, and also one of my clients for investment advice. Killing it per usual. All right, so let's go ahead and take a look at Bitcoin on a weekly chart. So we're seeing bullish order flow, fair value gap support, fair value gap support. So no surprise here that we're rallying on Bitcoin. Nothing here on a weekly chart indicated we were going lower. All we were doing was repricing down to this fair value gap and trading higher. So for those of you guys that are long Bitcoin, we traded above this buy side, 31K. My next upside draw is 32K. So I'll be interested to see, do we trade higher and then reject that? That's what I'll be favoring. However, I'm not going to look to call a top in this market either. We're bullish. So the next target is 32K for Bitcoin. That's what I'll be expecting on a weekly basis. And then through that takes us into the 34s. However, I'll want to see how we trade above that. We do have buy side here. So we could just take out that buy side right above 32 and then immediately drop lower. All right, so let's go ahead and take a look at a daily chart. So retracement lower down into these key levels, more specifically this bullish order block, traded right to this opening price. Beautiful delivery. And then we traded higher off this order block, creating an order block here. So I'm going to go ahead and cover something for SMT that can be used for all assets. I was specifically looking at this for Bitcoin and Ethereum, THUSD, but this can be used in all correlated assets. So many of you guys know SMT as lower lows, lower highs, and comparing the highs. But you can also use SMT with PD arrays. So because we see here that the Bitcoin market was unwilling to deliver into this fair value gap, Ethereum was. Ethereum did reprice into this fair value gap. And now gauge the relative strength of Bitcoin and Ethereum. Ethereum hasn't even been able to make a new highs, whereas Bitcoin has. And that's indicated by the SMT in that fair value gap, whereas Bitcoin was unwilling to deliver it. So there's never any surprises to us in the market. As I told you guys, once you know how to read this and you know what you're doing, the market's always going to indicate what it's going to do ahead of time. You just have to put in the work, put in the time, and understand what it is you're actually looking at. Spend time with someone that knows what they're doing or a professional. So still upside on Bitcoin. And this has been much easier for Bitcoin to rally because we have been seeing that pressure on dollar. So as I said, whatever market you trade, whether it's crypto, Forex, indexes, whatever, this intermarket analysis is important to do and can't be neglected because now you can trust buy models in Bitcoin. Why? Because we're bearish and seeing weakness in dollar, and dollar is second in the name here. So it's going to allow for Bitcoin to rise with much more ease. So looking at this thing on a daily chart, we could retrace a little lower. However, I'm expecting the shaded region here to be delivered to. So 3,200 is the next upside target for Bitcoin. And we could retrace a bit into these fair value gaps here and then trade higher. But given that we've already traded above the buy side liquidity, it'll be interesting to see how we trade now above these highs. So that's what I'm going to be seeing for Bitcoin and Ethereum. Then I threw the SMT in there, and that's not limited to these markets. It can be used for anything. Thank you, Adora. Your content is priceless. Thank you. Thank you for the support. Much appreciated. Much appreciated. And it's always a pleasure to be out here and spend some time with you guys. Awesome. So as I said, I think I'm going to wrap it up here. Go ahead and finish on the Bitcoin analysis. So with that said, shout out to Denise as well. Love all the love and support. Don't forget to give the stream a like. Appreciate that. That helps us out here a bunch. And yeah, appreciate the support, guys. Thank you all for joining us and spending your Sunday evening here with us. Hopefully this was helpful, and looking forward to another week of making some money. So you guys have a great rest of your weekend, rest of your Sunday, and hopefully everyone has a profitable, safe week. With that said, take care. Well, hold on, one more question. Adnan, sir, can you keep the stream for subtitles you can save? Yeah, so subtitles are available. I think they take some time to populate. I'll go ahead and check with the tech guy we have on our team. Usually it's about 24 hours from my understanding. However, that could be different depending on the length of the video. So if you still have that question, reach out in our chat, and then we'll definitely get back to you. But yes, there's subtitles in all languages for these videos. Hassam, amazing Sunday analysis. Thank you, my brother. Glad it was helpful. Denisha, be safe and stay safe in these charts. You guys as well. All right, thank you guys. I'm going to go ahead and sign off here. You guys have a great rest of your week. Stay safe and take care.